What's going on, everyone? About 63% of the S&P 500 closed down in the red today, as there was a lot of profit taking across the board. Whether you're looking at big tech stocks, Bitcoin, gold, silver, uranium stocks, McDonald's, or anything else, there was a lot of profit taking in the market today. So things are really starting to heat up. But we also had Tesla report earnings after the bell today, which is moving in a pretty exciting way. Regardless, in today's video, we're going to cover everything you have to know. We're going to cover some setups that can do very well in the event of a further sell-off. And we're even going to cover a couple dip buy setups that can present some pretty nice opportunities over the next couple of weeks. But we have a lot to cover today, so let's jump right into it, Tom.
Yeah, the market was pretty brutal today, Mike. Going back to the heat map here, that was one of the more brutal heat maps that we've seen here in the short term, especially with tech. You know, Nvidia, Apple, Google, Microsoft, Meta, all red, but even some of the other bigger tech stocks like AVGO, Qualcomm, Intel, AMD, etc., down in the red today by quite a bit, and even Tesla was down into their earnings. But I will say, Tesla, they might have fallen today heading into the earnings, but that's not how things ended up, that's for sure. Looking at their stock and after hours here, Mike, they are exploding, and they're holding well above now that $200 level, which a lot of people were hoping that they would hold above with these earnings, and now they're all the way up to 234, 235 in after hours. So they're starting to fill the gap up pretty well from that gap down that they had a couple weeks ago. They still have a long way to go back to the upside here, especially off of this recent double top, but at least it's good to see some positivity in the short term, especially coming off of that robo-taxi lackluster event.
True that, and looking at today's earnings a little bit more closely, they actually missed on their revenue expectations, but their revenue did come in up 8% year over year, which was good to see. On top of that, they beat on their profit expectations, and then their margins and free cash flow levels came in better than expected as well. Their gross margins were positive for the first time, which was also good. And one thing that I really liked about Tesla earnings today is that they are starting to get going more on producing more affordable vehicles. And they're actually starting to, Their target is actually the first half of 2025. The economy itself has been slowing down in many different ways, and I think by Tesla opening up like another door by producing more affordable vehicles can not only help them in like the short term, but I think it could also provide a lot of benefits to Tesla for many years to come. So overall, their earnings were good. I wouldn't say they were like mind-blowingly good, but good nonetheless.
Yeah, exactly. And I think a lot of people were really worried about him being overly negative. So I think with them coming in with a good EPS and at least revenue that's growing in a good way is a good sign. It might have missed the expectation a little bit, but I think people can forgive them, especially with maybe those cheaper vehicles coming out to take advantage of some of those macroeconomic conditions. But either way, looking at Tesla's stock here, we've been very worried about this stock in the short term because it's been double topping quite a bit around this 265 mark. It looks like today and after hours, we're getting back up really close to some major resistance around 235 to 236. So I'm definitely going to be watching that very closely heading into tomorrow. It looks like so far that's where the peak has been in after hours. We'll see if maybe Tesla can break out above that tomorrow or not, but that's definitely what I'm watching for tomorrow before we get closer towards that recent high.
What's nice about this one is that Tesla is extremely volatile as it is, but this earnings season has been one of the best earnings season for continuation plays. So by keeping Tesla close on the radar, not only for tomorrow at open, but also throughout the rest of this week and maybe even into early next week, this stock will likely trend in a pretty strong way. So by, riding those, waves of momentum, I think there should be some pretty good opportunities presented with this one. So either way, let's keep it close on watch. It's off to a good start, but it does have some heavy resistance overhead. We will continue to cover this one going forward because it is a crazy stock and it offers some pretty good moves quite a bit. So keep that in mind. But looking at the rest of the earnings lineup for the week, Tom, what's on the schedule?
Yeah, tomorrow morning we're going to see American Airlines report. We've seen some good moves out of the airlines recently following a lot of the good earnings like your United's and a lot of others. So if American reports well, that'll be nice, along with Southwest tomorrow morning also. And then UPS, Carrier, Tractor Supply, Union Pacific, one of the freight liners down there. That's a fun one always with those stocks. No, I'm just kidding. Those ones are boring. Don't actually look at that, guys. But on Friday we do have Colgate coming out too, and NYCB, which has had some crazy movement in the past. But I would say for tomorrow, Mike, my favorite stock is going to be stocks are the airlines, of course, especially whenever we go back and look at United and a couple of the other ones and the way that they moved recently off of their earnings. Hopefully we see some good reports here.
Yeah, it's the earnings continuation season. We'll call it that. Whether you're looking at United or TSM or Netflix or GM or Lockheed Martin or Philip Morris or any of these other big plays lately, we've been seeing some really good movement. So let's keep an extra close eye on all earnings stocks, especially over these next couple of weeks. But talking more about what actually happened in the market today, we saw a lot of selling pressure in almost the entire market. Again, whether you're looking at big tech stocks or industry specific stocks or Bitcoin or gold or silver or whatever else, there was a lot of selling pressure today. And to be honest, there wasn't any major news, which is more concerning than if there was big news. And when we see a market-wide sell-off like this with no major news, that just goes to show you that we're just seeing, straight up profit taking, and we're just seeing just more selling pressure, especially compared to the buyers on the other side of that. So with that being said, I think it makes a lot of sense for some selling pressure to come into play given how close the election is, and naturally some of the fears that exist in the market and around the world right now, whether in terms of a valuation sense or a geopolitical sense, as tensions around the world certainly are not getting any better. So with that being said, I'm not too surprised by this profit-taking situation. And I'll also say, if SPY continues to put pressure on its lows and we continue to see extended sell-offs out of some of the weakest stocks that we saw in the market today, like Nvidia or Meta or Amazon or some of these other tickers, this sell-off can get bloodier than it is right now. So the market's a little bit weak and fragile right now. It's not the end of the world, but again, this can intensify. So the main signal for that would be if SPY puts more and more pressure on its lows, because if that happens, that will kind of start the snowball effect of panic selling and just fear. So keep that in mind.
Yeah, SPY sold off in a pretty drastic way today, and actually down to a pretty major support that we've had on the chart for a long time, around 575, and that was a big level to watch there as it dropped. It actually fell through so many of the recent supports today, Mike. You can tell over the past few weeks, the movement has been okay, but we haven't really seen the volatility like we saw really pop in today, Mike. And I noticed that the VIX and UVXY started to provide some really good opportunities throughout this downtrend as well. So if we do see a downtrend, watch stocks like UVXY, maybe even SQQQ, SPXS. These stocks kind of inverse the market and will move up as the market moves down. But going to the SPY for tomorrow, Mike, that was nuts. I talked about the 575 support. I'm really going to be watching now the 580 and 581 resistance for tomorrow. If SPY rejects around here and we start to see a push lower, that might be a good area to maybe enter into some puts for a rejection. At the same time, though, if we see a pretty good breakout with these Tesla earnings and SPY starts recovering back up, I'm going to be watching the 582.50, 583, and then 584 resistances.
Sounds good. And right now, the way I look at the market is that it's kind of fragile, and we're seeing just some risk-averse action. As we look at SPY, not only today, but over the past couple of days, we could see that every time that it tries to run up, it gets rejected. And what's actually concerning is that these rejections are happening at lower and lower levels, especially since, just last week. October 17th marked the high, but ever since that point, each high following that has been getting lower and lower, which shows that the selling pressure is getting more and more aggressive. And when you combine that with the fact of, today's somewhat aggressive selling pressure, it definitely does get concerning. So again, we're not to the point yet where like everyone's panicking, but if we do see a decent pop up, I'm definitely going to be skeptical of that, and I really like the reward to risk playing the downside here. So, we'll continue to monitor this situation as the days go by, but while you mentioned a couple tickers like UVXY, SQQQ, and SPXS that can benefit from a market sell-off, dips and sell-offs can also present opportunities for good dip buys. As we've been talking about nonstop over the past year, gold and silver have just been crushing it, and especially gold. Gold is actually having its best year in 45 years, where we can see that the 2024 year-to-date returns are the greatest since 1979, which says a lot, right? And there's a lot of real reasons for this to be happening as well. As we've been talking about, valuations, geopolitical fears, federal deficit concerns, inflation, the election, everything like that definitely helps fuel this uptrend. But if we do see a fair sell-off in the short term, this can present a buying opportunity for those who've kind of missed out on this gold bull trend.
Yeah, it definitely can. And, the dip buy opportunity will definitely be real here on gold as we start to look at GLD, like let's just say on the uptrend overall, Mike, there's been a fair amount of dips and just consolidation zones that provide some decent opportunities to buy. And even the most recent one down around like October 8th to October 10th ended up being a pretty good dip to end up buying. So we'll see how many days this lasts. It looks like it generally lasts for a couple weeks when they do come in. So just keep that in mind too. But Mike, whenever we talk about gold and we talk about that high inflation number, I know you mentioned 1979. How in the world did gold go up 126%? I had to go do some research here, and looking at the chart for inflation, it's pretty nuts. That was one of the highest points for inflation in the history of the United States, besides like the World War II, for example. So I thought that was pretty interesting, and the inflation recently has gotten pretty dang high. But of course, as we know, JP's been getting it back under control.
But what is concerning, Tom, is we could see back in like the 70s, there was actually like a double dip inflation run where there was like the first initial wave of inflation. It cooled down for a little bit, and then it came roaring back again. And that is what a lot of people are concerned about this time because, the big man, Jerome Powell, made a bold move by cutting rates by 50 basis points. And the war against inflation certainly has not been won just yet. And both of these presidential candidates, aren't necessarily that eager to turn off the money printers either. So that does present a concern. So gold, definitely can protect from inflationary markets. So either way, keep this close on watch as always. But looking at the rest of the week in terms of important economic events, what do we have to look out for?
Yeah, on Thursday, there is some initial jobless claims which come out weekly, so that'll be pretty big here. It looks like they're looking for those to pop up a little bit by the consensus and the forecast. And then on Friday, there is some durable goods orders that could end up moving the market. But again, that's not anything as crazy as like, something directly tied into inflation or something along those lines.
All right, so basically there's nothing too crazy going on, so we could focus on these exciting earnings and normal price action. So good stuff there, and let's jump right into some setups and predictions. A stock I'm watching very closely right now is Apple, and it is to the downside. Apple actually had a pretty rough day as it fell by over 2%, where news came out that they will be cutting orders for their iPhone 16 by around 10 million units. Obviously, that's not a great thing to see, and at the same time, Apple is battling some heavy resistance overhead right around this $236 area, all the way up to like $237. Apple, is a powerhouse in many different aspects, but at the same time, it has certainly been weaker than other big tech stocks this year. When you combine that with the overall market that is pretty fragile and increasingly bearish price action, while the stock is right at its all-time high, in my opinion, that presents a pretty good bearish setup. Looking at Apple right now, I like the reward to risk playing it to the downside. Maybe a stop can be set right around this like $234 area with initial profit targets all the way down to $220 or maybe even lower, depending on how aggressive you want to get with it.
Yeah, I mean, I think that's pretty awesome there, Mike. I really do like that 234 resistance again here in the short term. And looking at that double top overhead, that is pretty insane. You know, even on like a 5-minute chart, it's rejected multiple times. But then you go to the daily and you're like, gosh, you know, a few months ago it was rejecting there too. So looking pretty good. I'll definitely watch it to the downside as well, especially in the short term. One stock that I'm calling out first here today is DJT, and it was up another 4.42% today. This stock really keeps roaring to life on the daily chart. Looks pretty awesome here, so I figured I would call it out again. I did talk about Funware recently as well. That stock was up another 21% today. Granted, though, I will say most of it was from a gap up in pre-market, but hopefully tomorrow we can see like PHUN start to break above the high of today, right around $15, and then DJT can start to break its high right around $36.70.
Beautiful. All right. Another setup that is close on the radar is UVXY, and it is to the upside. I know you already touched on this one a little bit, Tom, but looking at it a little bit deeper, we can see that it was up 7.5% on the day. And what's interesting with this one is that over the past couple of months or so, it has been going in this trend where it pops up, cools back for a little bit, and then pops up again. And we can see this made pretty clear just in like the short-term price action. Right now, it's in the process of popping back up again. Of course, the market itself is weakening, and as the market weakens and as more volatility creeps into the market and more fear takes over, that benefits an ETF like this one. As we can see, it's up 7.5% on the day. So either way, this one is definitely on my bullish radar in the short term. If we continue to see constant pressure on the low of day for SPY, I think this could make for a pretty good setup while the market is falling.
Yeah, I definitely do too, Mike. I like it quite a bit in the short term with this downwards momentum starting to develop a little bit more, and especially as tech keeps seeing this weakness like it saw today. You normally don't have a heat map that is as red as this, but Mike, you know, there's a lot of red here on the heat map. There was one stock today that isn't too green, but it is kind of surprising, and that's Walmart to me. It was up 1.5%. This stock just continues to impress in the short term. Made another new all-time high today and just keeps ripping here. I mean, look at this daily chart. It doesn't really get much better than this with Walmart. So Walmart continues to be a king, and for those of you that are like, oh, Tom, Walmart, that thing's slow. Some of these options today were moving up 250%, and even some of like the safer, like around the money options were like 100% plus. So I really like this with Walmart, Mike. It broke above this $81 resistance. It was kind of stuck at this range until we got this move the past couple of days, and I'm just going to keep watching for a continuation. I'm going to circle on the chart a good example of a continuation where it had moved up for multiple days, but then continued for like 2 or 3 more decent days there. So that's really what I'm looking for here with WMT.
All right, sounds good. Well, let's get right into today's momentum plays then. And with the first one, we have Peloton to the upside, and this one had some pretty good movement today.
Yeah, it really did. Peloton was up 10%, and they've been having some pretty good candles here, especially around open and stuff the past couple of days. You can see here on last Friday, they ended up really ripping as well. But going to the Bookmap with Peloton, Mike, there's a big resistance overhead around $7. And even in the short term, we saw a lot of resistance today, right around the $6.30 mark. Now, Mike, normally the Bookmaps look pretty, right? We're normally looking at like Nvidia, you know, or some type of bigger stock where there's usually pretty good volume here. Looking at Peloton, you can see that there's price action all over the place, but that $6.30 mark was obviously huge today. And as we zoom out, that $7 mark will be huge as a good target level for tomorrow. But with Peloton, I would love to see a 630 break.
Yeah, and looking at the Bookmap there aren't like too many sellers lined up overhead. Like you pointed out, there are like some specific levels, like $7 and like even like $6.50. But besides that, there's nothing like too crazy, which is a good sign for the bull case. So that's Peloton. With the next one, we have AT&T also to the upside. And Tom, I was pleasantly surprised with this one today.
Yeah, wow, they're finally having a good earnings report and going to AT&T on the daily. I mean, they are crushing it here, Mike. They've been doing very well so far the past few months, but whenever you zoom out, they are still pretty low in the grand scheme of things. But going back to the 5-minute chart, if they could end up ripping back above 2260 tomorrow, keep watching them up. And, you keep talking about the earnings continuations plays lately. This one looks like a prime candidate.
All right, and then with the last one, we have Coinbase to the downside.
Yeah, poor Coinbase. Not a good move today, down 5.6%. Bitcoin saw a bit of weakness as well in the short term. If they can pull back below 200 and then break below 199, I'm going to watch Coinbase back down. But just realize that $200 level will be very important to get back below.
All right, so we have the downside level for a potential move lower. That's for Coinbase. And then we have AT&T and Peloton for potential moves higher. But these three stocks are on watch only if they break through the levels that Tom listed. Basically, the stronger and more consistent these stocks move, the better the setups become. If they don't break the levels listed, or if they just chop around, don't force the setups. Again, we are looking for strength, consistency, and momentum here. So keep that in mind. And besides that, let's jump right into today's $645,000 big money trade. And we are looking at ticker symbol VST, and it is to the downside, and I'm actually pretty excited about this one. So basically, the big money bought the 110 strike put options that expire on January 17th of 2025. For my advanced traders out there, this was technically a put debit spread where they also shorted the 95 strike put options. But for those of you who watch the videos daily, you guys know that a couple days ago I actually hit on VST to the downside. So by seeing a big money trade like this, that is pretty nice to see. But basically what the big money is doing here is that, assuming that they are long these put options, they are expecting a big move to the downside. VST has been a crazy volatile stock over the past year, as it basically went from like $30 a share all the way up to highs of like 145 or so. It has been extremely volatile. And while it had big moves to the upside, it also has big moves to the downside, as we could see from its peak back in May, where it topped out right around 105 and pulled back all the way down to like 67. So given that we're seeing some tough resistance overhead right now, we have the election just a couple weeks away, and we have an overall market that's somewhat fragile, it definitely makes the bear case better for a situation like this one. Either way, I like the reward to risk setup playing this one to the downside, but I cannot emphasize enough that this is definitely like a higher risk play in the sense that, since these options are the 110 strikes, this stock does need a decent move to the downside in order for these put options to work. But in the event the stock does pull back, that comes with increased returns. So I like the setup, but also keep in mind that these options have until January. So if you're considering following along the big money here, you have to be willing to give the options the time they need. This is not a trade for tomorrow. They have time to them.
Yeah, quite a bit of time out to January, and looking at this lower high in the short term, I do like the technical setup here on VST. I was looking at this stock earlier, Mike, whenever the big money trade came out, and I zoomed out, and I was like, hang on, what's going on? What are these levels we were marking back in 2022? I was like, whoa, we should have been buying off that support. But nonetheless, VST has been doing very well here. I think almost too well. It's getting to the point of being very overextended in the short term, and I think that we could end up seeing a bigger pullback. And I think the lower high is also a really good sign, like I said, as far as the technical side of things. My biggest concern is it's kind of right in the middle of this like little range that's kind of formed. So if it does test the top of the range, that might put some people in some weird spots as far as stop losses go. But nonetheless, I do like it down here. And I would say it gets to the bottom of the range before it gets to the top, considering there's that lower high and the way the market's been weak here.
Yeah, in worst case scenario where the stock, starts to show more strength than it is now, then the play just gets cut. Ideally we want to see the stock make a lower high, but in the worst case scenario, the stop can also be put right around that like all-time high, whether it's closer to like $144 a share, or even if you put it closer to that resistance right around $140 a share. Both situations work. So either way, keep this stock close on the radar going forward. But we want to give a huge shout out to today's member of the day, Hawk's Nest in the Stocked Up trading floor. Huge shout out to you. Thank you so much for being a great member of the Stocked Up community. You've been in the chat for months now, and you're a great member. So we just wanted to, give you a shout out to say that, we appreciate you, and thanks for being a great member of the community. If you guys are not already in the Stocked Up Discord, definitely check out that first link in the description in the comments down below. We have a great community of traders of all different experience levels, and we have a lot of great free information as well, as seen in the Key Lessons channel. Again, completely free, so definitely check it out. It's a awesome place to be. Again, it'll be that first link in the description and the comments down below. But besides that, thank you all so much for watching. We have an exciting next couple weeks ahead of us, not only with earnings season and the election, but also market volatility just by itself. It's a great time to be a trader, but let's remember to trade in smart, disciplined, sustainable ways. Thank you all for watching, and let's crush it in the market tomorrow.